Welcome to the Valocity Housing Insight Report for June 2019, coming to you from the Kerbside of a drizzly old Auckland this morning. Whilst it's been an active couple of months for the framework which supports the housing market, OCR being lowered for the first time in a few years, CGT tax being taken off the table, the actual housing market itself is much unchanged from the month before. We've got the main urban centres with stalling value growth, and regional New Zealand playing catch up to those main urbans. In terms of impact on market participants, so we've got a market now where the working groups are reaching conclusions, we're getting results from them. However, we've still got a wait and see effect that's prevalent in the market. That appears to be fueled mostly now by overall debt levels that are required to enter many of the main urban markets, and just an aversion to taking on such large debt within certain buyer groups. Let's take a look at some of the key housing market metrics, starting with values. Overall, New Zealand house values increased for just shy of 5% to 577,000 in the last 3 months. In terms of the main urban centres, so that real slowdown of growth prevalent in all the main urban centres, with only the Dunedin that has more than 10% year-on-year value growth. The next key market metrics are what's being built, building consents. The trend here has been upwards for a number of years now, both nationwide and within the main urban centres. We look at Auckland, over 10% growth in consent volumes year-on-year. It is becoming increasingly evident though that the building sector is at a period of capacity or peak. It's time to rethink the framework that supports the building sector at a larger nationwide level. Moving on to buyer type breakdown, so who's active in the property market, who's playing in the game. And here we see a similar trend to that of last month, so first home buyers being the most active group in the market by a country mile, 29% across the country, 27% within the Auckland market. Investor share still declining to circa 16-17% across the country. Movers declining still, so those moving from one house to the next declining share. We see a big growth in those refinancing against the equity in their property. So we've looked at who's played in the game, registration type breakdown. Now let's look at sales volume. So again here, similar trend to last month. So nationwide we're circa 6 or 7% down in volume year on year. Within the Auckland market, 13 to 15% down in terms of overall sales volumes. However, we are still seeing that change in sales composition. So we're seeing a move away from the upper price brackets towards the lower brackets of that $750,000 to $1 million mark. Reflects the fact that first home buyers have been the most active in the market for quite some time now. So this change in sales composition towards the lower price bracket is still having the impact on the overall suburb level, so it can distort an overall value movement for a suburb and appear like we've got some rapid growth or decline within a suburb. Key message there being, don't panic. If you're seeing your suburb decline in value, it doesn't mean your house itself has declined by that same amount. It simply means that those properties which you're actually selling are selling at a lower price point than they were this time 12 months ago. Don't be alarmed. Let's look at the Valocity special report on property flipping as published in the One Roof quarterly report this month. We wanted to examine those properties which had resold during the housing boom years of 2013 to 2019 to look into the accusation that property speculators were those responsible for driving up the housing market during those years. Some key findings from that report were that of the 647,000 sales during that peak boom period, approximately 165,000 had resold, which is around 25% of all sales. Diving further into that though, we see that of the resales, the majority were to single home owners, so first home buyers, mum and dad, they weren't to investors. When we look at the frequency of those resales, the majority were sold between 2 years and 5 years, with under 10% at a nationwide level selling within 0 to 6 months. So that myth of property flipping perhaps starting to unravel here. So we found that over 70% of the resales, the property sold only once during that period. Looking at those that had sold more than 3 times, less than 5%. So that property flipping was a very small part of all resales, disproving the myth that property speculators were responsible for driving the market up solely during that period.